afternoon. You're watching Business World Live. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Wednesday. It's proving to be a tough hump day for the local bourse. The PSEI is Asia's worst laggard today. Shares tanked by 1.1% to 6,966.43, retreating once again to below 7,000. BDO's chief market strategist, Jonathan Ravelas, tells Bloomberg that rising oil prices are renewing fears of elevated inflation. Oil, of course, nearing $60 to a barrel. This, as a cold spell in the U.S., prompted power cuts, putting on a pause its output of more than 3.5 million barrels daily. Over here, their central bank governor, Ben Jokno, telling Bloomberg TV that consumer prices will remain elevated in the first semester, but might actually temper come the second half of the year. This, as the uptick he deems, is just transitory. Ravelas also attributes today's slide to unimpressive corporate earnings so far, dousing hopes of a recovery that the market was hoping for. Also, weakening sentiment here, Taal volcano's activity, which resulted in authorities putting in place forced evacuation. A wide, of course, eruption of Taal might actually prompt the government to spend more. Ravella says the markets will remain fragile and could actually test the 6,600 level should there be no catalyst. Now, we don't know just yet if this will be the catalyst we're looking for. Now, the government has signed the indemnity agreement with Pfizer and AstraZeneca for the COVAX facility supply. This should free the manufacturers from any liability should there be adverse effects from their shots. Such an agreement should move the country closer to getting its COVID-19 jabs. But let's see if markets will react to that bit of news. So far, however, like what I mentioned earlier, the PSEI, one of the worst performers, the worst performer, in fact, in the region here. Half of decline seen today coming from the SM Group. BDO shedding 3.1%, now priced at 105.60. SM price likewise also in the red, dipping close to 2% here, now valued at 37 pesos and 25 centavos a share, while SM Investments also tumbling close to 8% here, now priced at 1,060 apiece. Now a quick check on Double Dragon, the property player, making hefty gains today after the SEC has finally greenlighted its REIT share sale plan amounting to 14.7 billion pesos. The property player gained 3.2% today, its highest rise since the beginning of the year. As you can see in this chart right here, it's now priced at 14 pesos and 96 centavos a piece. And then off we go to Metro Pacific, one of our few winners in the main index today. That's after its toll units, FPM Tollway and MPTC, sold their indirect stake in Thai tollway operator AIF Toll Roads. The operator owns 25% of Don Muang Tollway. Now, the deal amounts to $149.3 million. Metro Pacific says the sale will allow MPTC to gain from investments and benefit from increased liquidity. The stock has been on a downtrend the past days, as you can see here, but that ends today. Metro Pacific snapping its losses, climbing close to 1%, now valued at 4 pesos and 21 centavos apiece. Now, here are other headlines we're keeping our eyes on. The Manila International Airport Authority is keeping to its own, with the Transport Department saying it can rehabilitate NAIA by itself. This comes as MIAA completed the upgrade in NAIA's airside facilities, which were inaugurated Tuesday. The DOTR says this is a more practical approach rather than waiting and depending on unsolicited proposals. The airport agency previously revoked the 109 billion peso rehab plan proposed by Megawide and its foreign partner GMR Infrastructure. It also rejected the company's appeal to take over the project. The DOTR says once additional airside-related projects are finished within the next 2 years, the agency will be able to achieve its goal of 60 commercial flight movements per hour. Now, eased restrictions and a vaccine rollout may likely push recovery in consumption this year. That's according to Fitch Solutions. Fitch Ratings research arm said the optimistic outlook comes from expectations of more jobs as the economy reopens. NEDA recently pushed plans for a nationwide lockdowns, easing to MGCQ. However, many still express reservations over this proposal. Private consumption, which makes up 70% of the economy, dropped 9.3% in 2020. Fitch Solutions now expects household spending to grow by 5.7% this year, mainly due to low base effects. Now, Socioeconomic Planning Secretary Carl Kendrick Chua says strict lockdowns have led to income losses for the country amounting to at least ₱1 trillion as businesses close down. All right, talks about reopening the economy started out with a resolution to actually operate movie houses once again. With this finally spell recovery for mall owners? To talk about that, we have Stephen Tan, president of SM Malls. Good afternoon, sir.
Good afternoon, Jess.
All right, so you have this proposal on the table for to reopen cinemas. How ready is SM Malls for this? The move, of course, facing opposition from the health sector and local governments alike as well. How do you assure them that it's actually safe to reopen cinemas at this stage?
Okay, we have been working actually very closely with the local government unit, no, on how to reopen our cinemas. We've done this already in the MGCQ area. So we're not just talking about the National Capital Region, but also the likes of Pampanga and Bulacan and the Visayas and Mindanao. No? We've opened several cinemas already, and we have been working very closely with the local government and seeking guidance from them on how to. Well, some local government would require us to have 2 seats apart. Some would just have 1 seat apart. So we know that safety is still the number one concern of the public, and we are addressing that, and we're taking that very seriously.
A good thing that you mentioned, sir, that you've done this in the past, at least in other areas, especially those already under MGCQ. Can you nuance us a bit about that experience and how has been the take up here, especially among moviegoers?
Okay, it depends. Some cities would warm up to going back to cinemas. Like for example, our mall in SM City, in Dasmariñas, Cavite, no, that would have higher attendance than the rest of the country. Maybe it also depends on the content. Right now, there's not much content available because also the producers are also still very, they're still anticipating for the opening of National Capital Region cinemas, not because that is where the bulk of the cinema goers are coming from. It's from Metro Manila. So it really depends on the content.
And at the same time, if I may ask as well, can you give us details here regarding seating capacity, and are you really expecting revenues once cinemas actually reopen?
More than the revenues, just no. If we look into our financials for January, our cinema is still running at a loss. We're not earning from it. As a matter of fact, to be honest with you, it's even better to close the cinema and not having it operated at all. No, if it remains operational, you have some fixed costs that you have to pay, electricity bill, and but the main concern here is also the employment. We really need to open up the economy so that we also have to give employment to, the people could go back to work already.
And
More than earning money, yeah.
And at the same time, driving more to the point about appetite here, how confident are you that moviegoers will indeed flock back to the cinemas? I mean, opening businesses is one thing, but getting them to spend is another. Is the consumption story already there?
Okay, I don't believe that we will be earning money from the cinema, at least for this year. No, so that is not our primary concern, as I discussed earlier. Our primary concern is really to bring back the confidence little by little of the shoppers, getting them warm up to the idea of going back and watch movie. It takes time. It's not immediate. It's something that you don't expect overnight. So, for us, as we have seen in the provincial malls, as long as the shoppers feel that the mall operator or the mall operators and the cinema operators are doing enough to let them feel safe and secure when inside the movie houses, I think they will gradually come back.
Okay, moving on from there, Sir Stephen, full year SM Prime's mall unit revenue is actually down 59% to 23.6 billion pesos. When do you see recovery happening, or has it already gradually recuperated? How much are you
Okay.
banking as well on the possible easing to MGCQ come March?
Yeah, I think we've seen the numbers that came out already for January and for the past few weeks of February. We've seen the sales of the tenants increasing little by little. Definitely, we will see a gradual increase in the revenue of the mall as well and the net income. However, I don't think it will go back this year to the same revenue that we have achieved 2019. It will still be more or less around between 70 to 80%.
All right, but when do you see things coming back to pre-pandemic levels?
I think it will come back. The full year for 2021, we hope that it will get back to pre-pandemic level by 20. No, I'm sorry, by 2022. But you see gradual improvement already. Last month was better than. I mean, this month is better than last month, and I think it will just gradually increase.
Okay, good thing that you mentioned earlier about your tenants here. I just want to ask about vacancy rates here. Are retailers still cash strapped, and what's the outlook basically for your tenants this year?
Okay. I've just reviewed. As a matter of fact, this morning I just reviewed our leasing data, no, and it shows that there's not much closure. There might be few closures of some stores, but there's still some application that's coming in. There are some malls or some concepts that wanted to expand their footprint in the mall. Like for example, you have all these new hobbies that's coming out, like for baking, for biking, health and wellness, health and fitness, pet stores. They all wanted to take up more spaces. No? So even if some of the category becomes smaller, some categories would definitely grow.
At the
So I
same time,
think
go ahead,
so
sir.
towards the end, I think towards the end it will just even out. No, as of this month, we only saw 0.03% drop in occupancy. So that's really irrelevant, as a matter of fact.
Okay, so that's just a 0.3% drop year on year
Yes,
for the month
yes.
of January. However, on the side of foot traffic here, has there been a significant improvement, especially with restrictions somehow easing, especially in some local governments?
Yes, definitely. But it's not just about the government easing the restrictions, but also the confidence of the shoppers. If I think if the shoppers or the general public sees that you're doing enough, we've invested in a lot of technologies to make sure that our malls are safe and clean. For example, the handrails that we use as UV light to disinfect the escalator handrails. We use in our air conditioning system, we added some UV technology. So I think little by little, people will feel that it is really actually safe. You have cathedral high ceilings in the malls, and also and a lot of open spaces.
I know this is going to be still a tough year, especially even with companies like SM Malls here. But are there any projects still in the pipeline here for SM Malls, at least for the year, despite the pandemic?
Definitely, definitely. Last year, as a matter of fact, in the middle of the pandemic, we opened two malls. We opened Zamboanga and we opened Butuan, and both of them, showed very, very strong take up from both our tenants and from our shoppers. No, and this year we will still be opening three malls. That would be Daet, SM City Rojas, and also the one in Monumento, the Grand Central, which is a big mall. No? So we're still confident with the Philippine economy, and we feel that by second half of the year, everything will become better, much better.
All right, some sense of optimism there, at least for the latter half of the year. Thank you very much for your time with us this afternoon, SMO's President Stephen Tan. Thank you, sir.
Thank you, Jess.
And those are the biggest news this trading day, February 17, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News.